Bitcoin or gold? Well, we measure them both. In fact, we have a special report on Bitcoin that comes out every 2 weeks only. But we've been watching the spread relationship between the cryptos, especially Bitcoin and gold, and Bitcoin and silver. Because our bet's on silver. We think silver's going to vastly outperform gold. Mm-hmm. I think silver's going to leave gold behind on a percentage basis. But that spread is measurable, meaning the spread relationship, the valuation of Bitcoin versus silver. Well, clearly over the last, since Bitcoin's been around, it's a baby. It's only been around half dozen years or more. It's thrashing. People can't quite put a valuation on it, but it has definitely beat gold and silver in an irregular manner, but in an upside manner. Very violent, just like its price has been. Those charts to us look vulnerable. In other words, it looks like we could be nearing a point where Bitcoin, on a valuation basis, relative basis, could top out versus gold and silver, and that they could replace it as the place where people are putting their money for safety reasons. And it wouldn't surprise us. In fact, I think maybe in the next month or two, we'll have enough evidence to make a statement to the effect that, okay, the shift has occurred. It's time now to shift out of Bitcoin and into gold and or silver, preferably silver. Now, that doesn't mean Bitcoin's got to go down. It just means that Bitcoin will shift relative performance such that silver will beat it going forward. And I think that's about to happen. We'll see some evidence in the next month or two, I think. If you look at a price chart of gold, you'll see, well, we made our high above 2,000 briefly last summer, had a drop. But there were two highs since then that were prominent, and they were both at 1,900 area. One was in January, had a drop into March, came back up in May, again, 1,900 area. So if you're looking at a price chart, you're saying, well, where do I get bullish on gold again? Or, if I sold my position, where do I get back in? You see this 1,900 shelf. And it looks like if you can clear that, you're on your way up again. And, that's what the price chart says. Mm-hmm. And when you look at a silver chart, it got up near 30 last summer, dropped down to about just below 22 in September of last year, and then went into a range between 30 area at highs. And by the way, if you look at weekly silver, you'll see that there was a cluster of 3 peaks that all had weekly closes around 28. So the intra-week, you got up to 33 times almost. But on the weekly closing basis, you've got 3 peaks around 28. So if you're looking to get into silver or reestablish your silver position, which you dumped or whatever, it looks like 28 area before you get excited again. Okay, that's what price says. So it's similar to gold. You're not there right now, right? Okay, silver's under 25, gold's at 1828. Our momentum work, when we analyze price and its relationship to certain long-term means, moving averages. And I don't mean overlaying some silly moving average on a price chart, but oscillating it on a momentum chart, shows major structure, just like those price charts do up there, except we're at the structure now. Mm-hmm. In the case of gold, 1825 is one of our magic numbers. You close a week out there. This is only Monday, okay? You close a week at 1825 or higher anytime during this quarter. As far as we're concerned, that's thumbs up. You're coming out of the starting gate, gold's beginning again. Okay. Silver's number is 2.5% or so above today's high in the low 25s, which when you look at a price chart, doesn't make, well, it was 25. It's sort of in the middle of the range of the last 16 months now. But when you look at our momentum charts, it says, no, you're about to launch again. So both silver and gold have moved up to levels that, based on our long-term momentum work, say, okay, you're at the point now where they're going to flip the switch green again and probably jolt these markets up out of this congestion zone. There's actually some other indicators that's based on 3-quarter moving average. Okay, now most people don't use that kind of average. It only changes once every quarter. You average the prior 3 quarters, you get a new number. Most people look at 200-day averages. And 200 days, if you think about it, well, it's about 3/4 of a year, okay? Now, on a 200-day average momentum chart, it's going to engage a bit before that. And I don't mean just getting above the average itself. That's not all that important. So there's a bunch of long-term metrics that we're challenging, and many of them we've already crossed. But we're looking at our 3-quarter average oscillators of gold and silver, and they're going to be the last ones to engage, but they're still going to engage well before you ever get up to price levels that the public's going to say, oh, breakout. And we're basically there. We're basically chewing it at the starting gate. Mm-hmm. And I think we're going to go through Treasury bonds, which is fairly illiquid compared to a lot of other government debt instruments, 10-year and so forth. But it's the least under the control of the Fed of any of the debt instruments. Okay, it's very long term. That it's behaving like gold. If you'll go back and look to last summer when gold made its high weekly close, that was in the first week of August. Well, T-bonds made their high weekly close, T-bond futures, in the last week of July, 1 week apart.
Interesting.
Both of them subsequently dropped in layers. Mm-hmm. And when did they make their low? March. Gold made its lows in March this year. T-bonds made their low in March of this year. Both of them rallied. Both of them then tried to pull back recently. Now, both of them have engaged on the upside. T-bonds have broke out last week, as far as we're concerned, in terms of their quarterly momentum. Now, why is that? You know, why would T-bonds be dropping in yields, rising in price? If one, the Fed taper talk is for real, or is it going to tighten in some respect, way, or form over the next year or so? Mm-hmm. Why would yields be dropping? And two, stock market's behaving well, so why would T-bonds be a flight to quality, you know, as they have been before? Why would people be buying T-bonds when the stock market's behaving well? And why also would T-bond yields be dropping if we have inflation again? It makes no sense at all, right? Well, technically, it makes a lot of sense because I think what's really going on there is to somewhat what's going on in gold, and that is major asset managers, hedge fund managers, mutual fund managers who've been around a while, have some experience and haven't forgotten the last 10, 20 years, you know, and gotten all gleeful because of the stock market. They're somewhat suspicious of what they see in the stock market. There's all kinds of valuations that just don't make sense. The longevity of the market doesn't make sense. The steepness, the recent steepness, especially since last summer, scares them because it's blow-off type action, and blow-offs end very badly the other way. So I think there's some smart money out there that's saying, hey, you know, I'm not going to get out of the stock market, but I'm going to shift some money out. Mm-hmm. 5% here, 5% there. And I think what they're doing is it's moving into those asset categories, safety of T-bonds and gold and silver. I think that's why those two markets are moving in sync right now. Don't expect it to continue. Because ultimately, yes, the T-bonds will go down in price, up in yields, because if inflation persists, which we think it will, then you will suffer if you're long the T-bonds. But right now, everybody got short. And the front page of the Journal today explained how so many fund managers and other institutions who've been short T-bonds, looking for higher rates, got killed recently. And I think it's only just begun.